Hello, this is another video from the Trader Guy, and this is midday, October 18th in the Forex session. Midday, and I should point out midday in America. I know not all of you are over here, so it is roughly noon New York time. And one of the reasons I like looking at the charts this time of day is because it gives you a nice look at what's happened over all three sessions. And looking at the euro dollar, something interesting is happening right about the 137 level. Now, it appears that 137 is an area, yeah, albeit minor, that we've seen some action. We have the gap from a couple weekends ago, 2 or 3 weekends ago, I guess. And you can see that we have had a bit of a reaction here and are starting to bounce a little bit at this 137 handle, which is kind of interesting considering all of the possibilities going on in Europe, most of which really aren't well. Now, there's been some reports on TV that supposedly Merkel is telling members of parliament that there's going to be a legal uh, mechanism for a European court to make members abide by the bylaws. There's supposedly going to be bank recapitalization on the table over the weekend to talk and such. And this could be a little bit of a reaction to that. Again, here's the gap right around the 137 level, and we're looking at it from a 4-hour time period now. So it's not a lot to get excited about, but we do need to be aware of the fact that the euro does seem to be trying to bounce a little bit here. And really, I think these candles here, this area, this question of 137 is going to be pretty key. If we can break down lower, then we're probably going to find 135 before it's all said and done. But if we can't, this may just simply be a pullback and a continued move upward, which defies logic, granted, but the markets don't necessarily have to be logical. Looking at the euro yen, it's another chart that's kind of caught my attention. And you can see that this is the weekly chart, and you can see I have a couple levels marked. And the levels that I have marked are, to say the least, interesting because of some of the recent action. And what I mean by this is, like, you can see that the 105 was major support at one point because we did have a couple hammers there in a row. And then 107.50, and that's kind of a guesstimate there, but you can see that that's where the real bodies and those hammers fell. So this little, 250 pip zone looks like it's a little bit of a battleground, so to speak. On this weekly chart, you can see that we had the hammer and we did shoot straight up, and now we've pulled back. The real question is can we get past this 105 level? Currently, it looks like we are going to struggle with it. However, it has to be said that the trend's down, so a breakdown isn't out of the realm of possibility by any stretch of the imagination. And you can definitely see where we've got a little bit of a descending trend line here recently. So to see this fall wouldn't be overly surprising. Looking at it on the 4-hour chart, you can see a little bit of a pop, but we're already starting to turn back down. So again, I think we've got real questions to ask of the euro right around the 105 mark. And the thing about the Japanese yen is that the Bank of Japan is intervening clandestinely, at least in my opinion, against the rise of the yen. But that is in the dollar yen pair, not so much in the euro yen pair. And this pair would absolutely have to melt down to really concern them. They're going to be more concerned about the dollar yen. And as long as the dollar yen stays stable, and it really has, the other pairs should be free to move about. So Euro yen is definitely worth watching. It definitely is in an area that looks like we're going to answer some questions as well. Looking at one more chart, we have the pound dollar, and this is the weekly chart, and I have the 157 drawn out. Basically, I was thinking that 157 is the beginning of a zone down to 153, so it's 153. So it's 153 to 157. I understand 155 is like the midpoint of that, and 155 is the bigger, rounder number. But I just wanted to show you why that line was there. We have broken back down below it, so now we have to ask some questions about the pound as well. And this session may or may not prove to be the answer, but we should get it fairly soon. This area here, which I'm calling 157 for lack of a better term. It's probably 156 to 157. It's about 100 pips. Not surprising, given the fact that it is a daily chart, but you can see that we had a little bit of a W pattern here, and that area kept a cap on it, and we busted out. Now the question is are we breaking out and retesting the resistance and support before we take off, or is this a failure? Because there are precedents for this area to create some type of negative reaction as well. There is bad negative news out of the UK in the sense that inflation is much higher than expected. While that a lot of times is good for a currency, with the situation they have in the UK right now with high unemployment and such, it's actually bad for the economy. So I'm not keen to buy the pound at this point, but I am aware of the fact that we are at a technical level that does need to be watched. So having said all of that, with that there, I think the next 100 pips is going to be pretty important in this pair, one way or the other. If we can break down to fresh new lows, to me, it's pretty obvious that we should fall to about 153 before we run into major support. There'll be a reaction at 155. There always is at these 500 pip marks, but I think 153 is really the target to the downside if we can continue the momentum. If we get the bounce here, there is also a possibility that we could enter a bit of, a range bound trading area, and that wouldn't be overly surprising as well either because, let's face it, the US dollar has its own issues as well. It's not U.S. strength that's driving the value of the dollar up. It's fear. Fear is basically the friend of the U.S. dollar at the moment in time. It's not necessarily that people are saying, "Hey, the U.S. economy is doing great." It's just that the U.S. economy is not doing horrible, and it is a safe haven trade. And of course, the pound isn't. So, having said all that, it'll be interesting see how this turns out.